Okay, recording this video after close of trade Monday, the 6th of April 2020. It's just gone 10:55 p.m. Chicago time. Hope you had a good Monday's trade. So, end of this video, I'll talk about the E-mini just briefly with the rally that we had today and the Bitcoin chart. But really the subject of today's video should be and is the bond market. Have we just bottomed in rates and topped out in bonds? We have a whole confluence of patterns kind of gone off today, and I want to show you what I'm seeing on my charts. So this first combination is a little bit messy on a small screen. On a big screen, it looks fantastic, but it's a little bit crowded here. But what I have is daily, weekly, and monthly charts for three things. The rates for the 5-year, 10-year, and 30-year bonds and notes. So these symbols are $FVX.X for the 5-year, $TNX.X for the 10-year, and $TYX.X for the 30-year. And as a bit of an old school kind of way of looking at my multiple time frames here with the daily, weekly, and monthly charts, but it's kind of useful for kind of the big picture. Obviously, with the rates, there's no kind of volume information, so there's no point putting on better pro-am or better momentum. But you can look at cycles and trends, so you can put on better sine wave onto the rates charts and see where they're going to find resistance and support and so on. A couple of videos ago, I talked about the pullback to end of trends on the weekly charts that have gone off. This is a few weeks ago now, and I said I was waiting for the pullback to end of trends to kind of go off on the daily chart. Sometimes, usually, what happens is the patterns kind of ripple through from the lowest time frames through the intermediate to the highest time frames. But in this particular instance, we had weekly charts kind of go off, and the daily charts you can see here for the 10-year and the 30-year, we had little pullbacks to end of trends. So that for me is really important. That means we're kind of done in terms of rates kind of going down. We've reached an exhaustion kind of activity with what we've seen in the last kind of few weeks, and that means we're going to have a pause, certainly, and maybe, hopefully, a reversal in trends and a sell-off in the bond market. So that's one way of looking at things on the daily, weekly chart. The other way of using this is if we use exactly the same data, so the 5-year, 10-year, 30-year rates, but using the multiple time frame versions of beta sine wave. So this is where beta sine wave combines a low, an intermediate, and a high time frame. So on a daily chart, those time frames would be the 1-day cycles and trends, the 3-day cycles and trends, and the 9-day cycles and trends. And you can see on the 10 and 30-year pullback to end of trends kind of gone off here. We had those spikes down a few weeks ago in rates, and we've kind of tested back in, and we found support, and we had a bounce today in rates. So that for me is pretty significant. It means that this journey that we've been going through with kind of rates dropping and dropping and dropping, this could be the end of a particular chapter in that. So we've certainly moved a long way to the downside. Time for a little bit of a bounce. What is it doing to us in bonds? So if the rates are down, that means the bonds have topped out. So this is the 30-year chart daily at US for the 30-year bonds. And on the right-hand side, we have the price indicators, beta sine wave below the price bars, showing us the cycles in the low, intermediate, and high time frames. And then on the price bars themselves, what we plot is based on those cycles, support and resistance for the low, intermediate, and high time frames. And then breaks above resistance are strength and uptrends, and breaks below support are weakness and downtrends. On the left-hand side, everything to do with volume. Below the price bars, we've got better momentum, which kind of calculates the buying and selling volume momentum. And then we calculate the average trade size, and based on that, identify professional activity, painted in blue, and amateur activity, painted in yellow. So the 30-year bonds, you can see with the activity that we had with the sell-off, there was a huge rush to safety, blow-off move up to above 188 on bonds, exhaustion buy patterns, bearish divergence come in, and there's the pullback to end of trend. You'd expect a mirroring pattern in this. So if you see, the 30-year rates have gone pullback end of trend, you'd expect the inverse of that is the bond chart, and so you'd expect a pullback to end of trend, kind of topping out activity in the 30-year bonds. And with here, this whole activity here, I'm sure the professionals were buying it as the breakout into new highs here happened at 164 to 8, kind of in that region there. Bang, they were buying it there, but then they were kind of laying it off as soon as it got up into the 188s and so on, this activity here. So it's a combination there of, professional activity. Now, the bearish divergence signal has gone off, and I like these for turning points, but there's a problem with this one. It's right on the zero line. I prefer bearish divergence signals that are kind of midway in the move. And what that would suggest is that, yes, we could have a little bit of weakness, but we might come back up in the days and weeks to come and have a flush pattern and kind of push back up into bonds to test again into those highs. And that potentially could happen when the intermediate time frame kind of comes into play. So we're above resistance on the intermediate time frame, but we've got to come back into support on the intermediate time frame and push that up. So I'd expect there's still some way to go in terms of the bond market correcting and turning over and turning into a full-on bear market, but this could lead to some weakness in the meantime in the bond market, and until we come back into some area of support. Amateur down bar, it's a bit of a shame. It would have been nice if the last couple of bars had been amateur up bars into those highs. That would have been a classic pattern. But with the amateur down bar, I don't know. We'll kind of wait and see over the next couple of days. So pattern's a little bit different on the 10-year, but you can see the blow-off activity that we had here. The way Better Pro-Am kind of trailed it up was a little bit different than the 30-year. But it is what it is. Same pattern though, bearish divergence on the zero line. So we're probably going to go for a flush pattern, which will probably be the best entry signal. But for the time being, I could see us having some weakness from where we are here. And again, we've overdone it in terms of pullback to end of trend. We've blown past it on the 10-year contract, and we're kind of underneath this kind of lip here. So look for some weakness if this call is right on the bonds for some kind of weakness to lead with a little bit of a rally in rates. So there we go. Could be an important day in terms of turning points for the bond market. Then let's talk about Bitcoin just quickly. Bitcoin's rallied up through to 7,004, which is nice. So we were looking at these levels here for this. We had the sell-off down to threes. I think we were down here. And then we started to rally, and I said that we were potentially going to have like a V reversal in the Bitcoin market, and eventually this thing kind of played out, and it played out to finally a support on the highest time frame kind of coming in. So we had a little bit of weakness, but it was weak weakness. It was kind of just it wasn't really a sell-off. It was just kind of weak into here underneath that resistance, because we had those resistances kind of in place. But then as soon as everything starts to come together, then we get cyclical support on the highest time frame, come in here, cyclical support on the intermediate time frame, and we start to bust up into that trend quite nicely. And it was a beautiful little Rambo pattern here. So the amateurs losing faith, they were kind of maybe buying that breakout at this point here. No, a little bit too early. And then it goes the other way, and they're either kind of getting out or shorting it kind of down here at 6,000. But it's the wrong move, kind of bounces from there. So that's the Bitcoin chart, which we're starting to rally. Exhaustion buys, yes, but no blue professional bars. We're above resistance on the lowest time frame. We're going to find trouble when we find the resistance on the intermediate time frame, and that's due at some point. So that's going to find us a little bit of resistance on the upside. But it's taken a while, but it was when the highest time frame support came in that things started to really get interesting. Lastly, let's just talk about the E-mini today, because we had a pretty strong rally the overnight from the Sunday into Monday's activity. And this is the 15-minute chart. It's day session only. That's why you got the big gaps. We had the big gap down last week and the big gap up Sunday night into Monday morning here. But the reason why it happened was we had a whole confluence support patterns kind of come together. Pullback to end of trend on the lowest time frame. That was a pullback to end of trend on the highest time frame, and support on the intermediate time frame. So it's a triple going on here. That's set up for the rally, and then bang, happened overnight, and then we kind of continued during the day. Don't think it's all over on the downside, but I think we're just continuing to press up and kind of pull. I called people suckers, last time I put a video out. I think that's pretty mean. So take that back. But it's amateur bars. It's another Rambo pattern here. I think we're going back to put in a bearish divergence at this point and kind of wrap around on the 45-minute chart. When this kind of comes together, we're coming up for cyclical resistance on the intermediate time frame, cyclical resistance when these come together and join on the highest time frame. That'll be an area that's going to be very tricky to kind of get through. So it's somewhere between now and 28.65, kind of in that region. I would expect we're going to find some difficulty and then kind of roll around and go test the lows. God knows what the news is going to be that's going to push us back down through there. Maybe, it's that we get out of lockdown and then, things are bad and they decide to lock us back in again or something like that. Or maybe, heaven forbid, something dreadful happens to Boris Johnson or some kind of news event that would kind of push us back down to test the lows, I would have thought, and get that exhaustion sell. Still my hypothesis that we should go see that exhaustion sell on the 15-minute chart. But who knows? We'll just have to wait and see. Anyway, hope your trading is going well.